Behind every contract, every deal, and every successful project lies a hidden powerhouse: commercial management. But what does that really mean? Imagine a tech merger falling apart due to unforeseen regulatory hurdles, or a construction company going bankrupt because the cost of materials doubled and their contract didn't protect them. These aren't just nightmares. They are the costly realities that unfold when this critical function is ignored. You may have heard of project managers or finance directors, but the truth is, without commercial management, companies bleed money, lose deals, and stumble on risks they never saw coming. So what exactly is commercial management? Let's break it down. At its core, commercial management is the discipline of maximizing business value while minimizing risk. Think of it as an equation. Commercial management, shaker business value, plus risk control, plus contract strategy. Business value isn't just the price tag, it's long-term profitability and strategic alignment. Risk control is the defensive playbook, foreseeing every potential pitfall, from market shifts to supply chain failures, and building a fortress to protect the company. And contract strategy is the offensive game plan, architecting agreements that are not just legally binding, but commercially intelligent. So, think of it as more than just the guardian of a business deal. It's the architect and navigator, ensuring every deal steers the company toward success. To truly understand its power, you have to see where it fits. Picture the classic internal tensions. Your finance team is focused on minimizing costs. Your sales team is driven to close deals, sometimes promising the moon to get a signature. And your operations team has to deliver on those promises, often with tight budgets and timelines. Each department has different goals. Commercial management sits right in the middle, acting as the essential translator. It ensures the deal that sales closes is actually profitable for finance and deliverable for operations. It's the crucial link that aligns everyone toward a single, unified goal, making sure the business terms are fair, profitable, and sustainable. So, what does a commercial manager actually do day to day? Their role is dynamic, resting on 4 core pillars. First, contract management. This is about asking the tough questions during negotiations. What are the payment terms? What happens if there are delays? They then draft crystal-clear contracts that leave no room for ambiguity. And enforcement? That means tracking milestones and managing change requests to ensure everyone honors their commitments. Second is risk management. A commercial manager constantly asks, what could go wrong? Imagine a company relying on a single supplier. The commercial manager identifies this risk and builds a mitigation strategy, like finding a backup supplier or negotiating protective contract clauses. They turn potential disasters into manageable challenges. Third, revenue assurance. It's shocking how much money is lost between a signed contract and cash in the bank. This revenue leakage happens through incorrect billing or unbilled scope creep. The commercial manager plugs these leaks, implementing systems to ensure the company gets paid for every bit of value it delivers. Finally, there's strategic input. This is where commercial management becomes a partner to the C-suite. By analyzing market data and past project performance, they provide insights that guide smart decisions. Should we enter a new market? Is our pricing model sustainable? The commercial manager provides the answers that guide intelligent growth. In short, a commercial manager is the business conscience of the company, making sure ambition doesn't outrun reality and profit isn't eaten up by hidden risks. The impact of this role is not theoretical, it's measured in millions of dollars. Let's make this real with a tale of 2 companies. Imagine 2 software firms, Innovate Corp and CodeStream, bidding to develop a new banking app. Innovate Corp, lacking a strong commercial team, is desperate to win. They submit a rock-bottom price and sign a vague, fixed-price contract. Halfway through, the client requests a major new feature, scope creep. With no contractual mechanism to charge for the extra work, Innovate Corp's profits evaporate. They deliver the project late, over budget, and at a loss, damaging their reputation. Now consider CodeStream. Their commercial manager insisted on a detailed scope of work and included a clear change control clause in the contract. When the client requested the new feature, CodeStream was able to present a fair price for the additional work. They delivered the full project on time, exceeded profit targets, and were immediately hired for a second project. They didn't just win a deal, they built a profitable long-term partnership. One path leads to financial strain and lost opportunities. The other leads to sustainable growth and a competitive edge. This discipline is the backbone of success in any industry with complex deals. That's why global firms, construction giants, tech companies, and energy leaders all rely on commercial management as a core function. But it's not just for massive corporations. Whether you're a startup founder negotiating with investors, a freelancer drafting a contract, or a manager responsible for a budget, you are performing commercial management. So the next time you hear the term, remember, it's not just paperwork. It's the heartbeat of smart business. It's the strategic thinking that turns an idea into a profitable reality. If you want to succeed in leadership, project delivery, or entrepreneurship, understanding these principles isn't optional, it's essential. Did this video change how you see business strategy? Drop a comment below. And if you found this valuable, don't forget to like, subscribe, and share this with someone building their career.